Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the special edition on Akshaya Tritiya. Here's wishing all our viewers a very happy and prosperous Akshaya Tritiya. Now all of you must be wondering on this Akshaya Tritiya, the most important occasion and the most auspicious occasion where we start off with our new beginnings and also invest in gold and silver, what should be the strategy that we should adopt this time? Especially this Akshaya Tritiya comes on the back of stupendous returns in both gold and silver that we've seen over the last 1 year. And of course, we have also seen milestone levels on gold and silver of over 1 lakh being crossed as well. So it becomes even more important to understand from the top experts of commodities to help you guide as to what should your strategy be. Let me welcome on board. We have a star panel today. Sugandha Sachdeva joins in, founder of WealthStreet, with us on the program. We also have Navneet Damani, Senior Group Vice President, Head of Research at Motilal Oswal Financial Services, joining in. And we are also joined by Sachin Jain, Regional CEO of India for World Gold Council. Warm welcome to all of you and happy Akshaya Tritiya to all of you, to your loved ones at large. And with this year turn out to be a fantastic year for all of you at large. Let me kickstart with Sugandha and understanding from her what this Akshaya Tritiya really means for large investors. She must have been answering some thousands of calls since yesterday. What should be done, at what time should be done, and whether to invest in gold and silver this Akshaya Tritiya. In fact, it's cooled off a bit today for MCX gold prices. They're down by about 600 odd levels, and 94,990. We've slipped below 95,000, so that actually gives some kind of a breather on gold prices. What's the sense that you have, Sugandha?
Yeah, hi Sakshi. Thanks for having me on your show. First of all, wishing you, my co-panelists, and all the viewers a happy and prosperous Akshaya Tritiya. So, talking about gold, gold is in the limelight. It continues in golden run. It's up almost 250% in the last decade. When prices in 2015 were hovering around 25,500 odd levels, prices are currently hovering around the 95,500 odd levels. So it's a symbol of enduring value and wealth creation. It is kind of a timeless asset, and every purchase that is made on Akshaya Tritiya means spiritually it is considered to be meaningful and it symbolizes lasting prosperity. And why not? It has given such steady returns over the years. And in fact, since last Akshaya Tritiya also, gold is up by almost 31%. So the faith in gold continues. It's kind of a part of our family legacy, trust, and faith. So why gold is up? It's since 2016 onwards, we have seen a stellar rise in gold prices. The Trump first term, it led to a lot of tariff-related concerns, then the COVID pandemic, then the Russia-Ukraine war, the banking crisis in the US, Israel and Hamas conflict, and the latest tariff war, which is continuing between US and China. All of these have led to a lot of economic uncertainties. Apart from that, the Russia-Ukraine war is lingering on, and that is leading to a lot of geopolitical risks. And add to that continued central bank purchases, which they have been purchasing in huge quantities in the last 3 years, and since 2006 onwards, they have been buying, especially led by Russia and China, who have been voraciously increasing their gold reserves and are kind of reducing their reliance on the US dollar. Apart from that, for the last 2 quarters, we have seen substantial inflows into gold ETFs also. In the first quarter of this year also, we have seen almost 221 tons added to gold ETFs globally. So this is a shifting trend which we are seeing after a period of around 4 years. We have seen significant outflows from the global gold ETFs, but then investment demand is gold is returning, all because we have seen stellar returns in gold. So that is a primary reason why we are seeing a lot of shifting trends towards gold. And I think this is a structural shift, be it the investors getting allured by the safety of gold, or be it the central bank who are diversifying their
Right.
reserves away from dollar. So all of this overall is likely to continue, but then my sense is that prices have already overstretched a bit. We have already seen all our targets being met. So there could be some cool off in prices from current levels. I do not rule out a near-term spike in prices because the trade friction continue between US and China is not ready to, answer back US calls for a trade negotiations. So this near-term uncertainty might lead to some spikes in gold, and we could see levels of around 1 lakh 2,000 as well. But then the overall trend now calls for a bit
Sure.
of caution here.
Okay, so Gandha, thanks for setting all that context right. Going across to Sachin now. Sachin, usual trend on Akshaya Tritiya that we have observed thus far is that gold buying happens anywhere between what 18 to 20 trillion. But now we want to know from you, after all this surge in gold prices that we have seen, historic levels that we have seen, is there any moderation that you see for today, for this Akshaya Tritiya? Because on the upward trend, we have actually not found too many opportunities to buy even before, and now we are standing at near all-time highs.
So, first and foremost, big thanks to all to you to having me on the platform, and best wishes for this very auspicious and prosperous day. And as as we were hearing from from what is Akshaya Tritiya, it's about prosperity, wealth, joy, happiness, and how what you sort of envisage will go and grow. And I can tell you that any of the viewers who've been investing in Akshaya Tritiya over the period will be very happy today because every element of what they put forth has grown. So that's to do with fundamentals. A lot of details were given by Sugandha around what really happens around gold. But
Yeah.
important things that I'll bring out is that yes, from a perspective of demand, we've seen a bit of drop in volume, but we have to see it from the lens of value. And from a first quarter perspective, while the price of gold kept going up, the Indian consumer tends to wait and watch. We always sort of see once there's stability, people come out and buy. But eventually, we've seen a growth of 22% in value terms, and that purely is a result of the confidence that we have in the metal. Akshaya Tritiya, from a perspective of whether it's going to grow up or not, 100% is going to grow up in value, and we believe that from a volume point of view, particularly jewelry, it might be a little slow, but from a value perspective, it'll be here to grow and to. And we've seen retail investors that come out, and if you there'll be a lot of tokenized purchases of bars, coins that we see always, and we're already getting great news around the bookings that have been done by jewelers and people pre-book, and the 2 lakh to 5 lakh bracket has been booked quite a lot.
Okay.
These we've not seen too much booking. The expectation is that that ticket size will be very sort of responsive to what the price is today. And as you mentioned, that price is a little soft. That's a great sign. And we believe that the great footfalls that we're expecting in the stores that already began from early morning today, I'm pretty hopeful it will be a strong day today.
Okay, coming to Navneet now. Navneet, I think the big question for you is that should one really invest in gold at the current levels as well? And what is it that you foresee till next Akshaya Tritiya? What is the kind of return that one can expect? Somebody who invested in the last year or in the last 3-4 years, they've actually had a bountiful of returns that they've enjoyed. I mean, you have all the levels that are coming in on the screen for all our viewers to really see. Just last 5 years, you can actually see such a substantial move from 47,000 odd to all the way up to 96,000 is what we have seen for gold in 2025. In the last 5 years, it has been a stupendous rally. But for somebody who wants to even invest right now, of course, prices still look expensive and steep, but the way the returns have been, like Sugandha pointed out, do you think we can repeat the kind of returns that we have seen until the next Akshaya Tritiya or the years to follow?
Well, firstly, greetings for Akshaya Tritiya to all the audience. And Sugandha, without a beat, has explained beautifully that what has happened over the last 10 years in gold. The returns have been phenomenal, and it is behaving more like a financial asset than a safe haven asset. I must say
Yes.
that in the last 5 years, it's given about 21% kind of a CAGR, better than what your Nifty and any other asset class is giving you closer to. Now, is it still a buy? Will the prices still go up? It is a bit overstretched in my opinion, but I do not rule out a possibility of prices going higher because President Trump and the kind of fanatics we have in this kind of framework is somebody's guess that where the prices are headed. Now, to briefly summarize, we had three ongoing wars until 2024, and now a new trigger has started in terms of tariff tantrums between US and China, which are the two largest countries in the world. And US was already kind of struggling with higher inflation. The inflation cooled off, interest rates started to come down. But what has happened is with these kind of tariff getting imposed, inflation are likely to move higher. Growth is likely to go slower, and the possibility of rate cuts are going to take a back seat. With this backdrop, you've seen a massive correction in dollar index from 106, 108 levels. It's come down crashing towards 98, 99 levels, which typically indicates that the kind of geopolitical environment that we are into is going to keep things volatile. We are already exhausted our target at 3200, and now we look forward towards this kind of volatility where prices could extend towards 3600 or maybe 1 lakh 1 lakh 2000 also in the domestic front. But from a retail standpoint, if somebody wants to invest in gold, maybe this is not the right point. You can wait for a reasonable or healthy correction, a correction towards 3200 $3100, or maybe below closer to 90,000 will be a beautiful or reasonable entry point from a risk reward standpoint. At current level, the risk and reward is 1:1. One can either take that bet. But if you are a tactical investor, it is worth investing. If you are a long-term investor, maybe you could buy it in tranches towards 88 and 90,000, where risk reward will favor you and probably returns will be about 10 to 12% over the next 1 to 2 years.
Okay, buy it on the way down, stagger your purchases, and therefore you can actually expect to get a 10 to 12% return on gold, because there will be some opportunities on the way down as well. Coming to Sugandha yet again, Sugandha, I want to understand from you. You have talked a lot about the various forms of gold that nowadays people have choices of. Physical gold, of course, we've discussed so much. There's gems and jewelry. Then there is also gold coins and bars. But beyond that, gold ETFs, gold mutual funds, digital gold, which have been the latest, forms of gold that investors have got an opportunity. Of course, one of the forms was SGB, that's now discontinued from the government. That was a very popular one. But beyond that as well, over the last 6 months, 1 year perspective, we have actually seen more and more flows coming in on gold ETFs and mutual funds as well. What is your suggestion right now for somebody who's only looking for a pure play investment? We have heard quite a lot that, okay, 5-10% of your overall investment portfolio should go to gold. One, should that allocation increase looking at the current scenario? And two, how would you explain gold ETF and mutual funds as an opportunity to investors?
So, answering the fact that how much gold should be allocated to your portfolio, I think Sakshi, for over the years, I've been always talking about 10 to 15% allocation towards gold. But then now is the time to reduce this allocation slightly, at least in the near term. Rather, one can increase the allocation towards silver, but then this is the first time I'm saying reduce the allocation to gold and increase your allocation to silver. Silver being highly volatile, but still it is undervalued. So at this moment, I would not call for a 10 to 15% allocation towards gold. If you are a tactical player, yes. If you are a long-term investor and if you are looking at a strategic play, yes, you can still invest 10 to 15% of your portfolio in gold. But current situation doesn't call for that. We've already seen significant highs in gold, and now I think prices are. We should not be chasing short-term highs. Prices have already tested almost 27 peaks this year. So now it's time to cool off, to see a cool off in prices. So another question is how one can allocate into gold through various mediums. So physical gold is still assumed 90 to 95% of our purchases in gold, because you get that touch and feel, and gold has long been used as a consumption asset. But now investors are realizing the value of investing in gold as a financial asset also. There are new sources of demand. We are seeing increased flows into ETFs globally as well as in India as well. In fact, China has also allowed its pension funds and insurance companies to allocate 1% of their overall AUM towards gold. So which would mean around $27 billion into gold demand. So that is another pillar of demand which is coming in. So similar is the trend which we are seeing from RBI also. RBI has also been increasing its reserves. So now coming back to this point, how retail investors can invest in gold. So if you're somebody who is looking at liquidity point of view, gold ETFs are the best option, because you get the ease of buying as well as selling, and you only have to pay a slight expense ratio. You are spared from the making charges, the storage concerns, the theft concerns, and the purity concerns. Whenever you feel you want to encash on the profits in gold, you can easily sell your gold ETFs. The second option is gold mutual funds. If in case you do not have a demat account, you can certainly park your funds in gold through gold mutual funds. Here you have the option of rupee cost averaging. You do not have to time market. Month on month, you can continue to build your corpus, and you can start with as low as rupees 100. So you do not have to shell out big amounts, which you have to do in physical gold. So you can start with very low amount. Apart from that, you have exchange traded derivatives, and you also have the flexibility of investing through UPI option and through digital gold. Even though it is not regulated, but it is also backed by physical gold. So that is also another avenue which you can look at. So my preference would go for gold ETFs, even though gold bonds have been discontinued by the government, but then you still have them available in the secondary market, even though liquidity is a concern and you have high premiums in the secondary market, but then that is also another option you can look at. So these are the five options which you can consider while you want to have exposure to gold.
Okay. Sachin, I'll come to you. In fact, World Gold Council has also released its report today on the demand trends that we have observed. For January to March, what we have observed from your report is that in India, the gold demand is at 118 trillion. That's down 15% on a year-on-year basis. What we've also seen is that the demand for gold jewelry is also down by 25% on a year-on-year for the January to March quarter. The investment demand, however, is up by 7% and was at 46.7 trillion in the January to March quarter. The net bullion imports have come in at 167.4 trillion. That's also seen a jump as well. Overall, on a global level, what you have seen is that the demand has been probably flat, but it has doubled in gold ETFs is what we have seen, particularly on the world level as well. Now, help us understand what have been the key reasons behind the key findings of your January to March report, and what is the trend that you expect going forward for the rest of the fiscal year?
Right, so just some corrections there. So it's not trillion, actually, it is tonnage that we mentioned there.
Okay.
So just to give you a bit of reference, so you're absolutely right that the consumption of India was about 118 tons of gold in the first quarter. And it's actually down by 15% in volume. But from a value point of view, which I was making the point before, it's about 22% up, which is total of about 94,000 plus crores of consumption. And it's very significant that that reflects on the strength of the metal and the interest of the consumer on the overall category. Now, break it down from jewelry, the volume is down about 25%, but value is still, again, significantly up. From an investment perspective, about 7% is up, which results into about 54% up in terms of value. It's about close to about 37,500 crores that has gone into it. So that's the Indian perspective. On a global perspective, it's largely been leading by the ETF side, where the entire 2024, the additional AUM was about $3.8 billion, whereas just from January until end of March, we saw a surplus of about, addition to the AUM, about $19 billion in total. So largely led by financial side of conversation, but again, the broad pillars on which the gold prices is built on, be it geopolitics, be it safe haven, be it central bank buying, which has been quite significant and consistent. Central banks last year bought upwards of about 1,050 tons, and first quarter it's been again a very strong pillar of about 244 tons that central banks have bought, and largely led by the developing markets. You know, China did it, India did it, and even Bank of Poland has bought about 50 tons. So all of these fundamentals of gold are strong and are in favor. I do not discount the fact that whether pricing is going to go up or down, but I think the moment you look at it from a long-term lens, it's going to be a very strong asset.
Okay, got that. Apart from this, Sachin, I also wanted to get a sense. 3 years consistently, we've seen over 1,000 ton of gold being bought by the central banks. So far, I think it's you talked about a 244 tons as well. What exactly are the factors that could continue to fuel this buying trend?
Well, broadly speaking, there's been a whole conversation around de-dollarization I've been hearing over the last year. That's one of the reasons. The other element also is that with the trade wars that were there initially and after the Liberation Day, the so-called Liberation Day on 2nd of April, it will continue that geopolitical tensions or geopolitical conversations will continue to hover. The focus really is on dollar being the overall conversation versus gold, and I think countries are increasing their bets around gold. And the fact that the overall global debt is such a crazy number if you look at it, and there'll be some seamlessness or some semblance coming there, where gold tends to be that the strong pillar of tangibility, and not just in paper and not just debt from A country to B country. And I think with these factors, these central banks will continue to buy, and that's what they've reflected on all the trends. I mean, RBI has also reflected in their recent report that they will continue to buy gold, and so have most of the global banks. China itself has already started their buying in April. So I think we see that trend going stronger and much more.
Okay. Navneet, coming to you then, I want to also understand from you when it comes to deciding first the allocation in the overall portfolio, there is a lot of confusion still. We have discussed all the forms of gold. Sugandha has clearly identified the key options there. But when it comes to allocation, how does one define how much gold is for consumption and how much is for investment? So, of the 15% that we invest, how does one decide that aspect?
Well, largely, if you want to wear gold, if you want to flaunt gold, then it makes sense to buying jewelry. Otherwise, it is logical to buy it in form of bars and coins, because as soon as you purchase jewelry, you lose about 8 to 12% of the value in terms of making charges. Plus, you don't have great clarity over what are the carriage that you bought and what have you paid for. So secondly, the kind of churn that you can have with bars and coins is very different than what you can have with jewelry. So that all demarcation one has to have in their portfolio. But in totality, as a component, ideally 10% at best. If you are a trader with very low risk, then maybe 15% should be part of your portfolio. Our wealth management arm advocates about 10% of your portfolio could be at best between gold and silver put together. So as a company, we stick to about 10% investment in gold. Now it could be mixed between the physical gold as well as digital gold, or maybe in form of jewelry, whatever be the mix. And some bit of money could be demarcated for silver as well, because it is proving or probably moving pretty much in tandem with what gold is delivering.
Hmm. Okay, got that. Sugandha, coming to you now. I want to understand like a trajectory or trading strategy for all the traders of gold and silver today. What would you suggest as a trading strategy?
So as a trading strategy, gold is still up. If you look at the international markets, $32.50 per ounce is acting as a strong support area, at least in the near term. And with the kind of weakness that we are seeing in the dollar index, which is hovering close to a 3-year low, we still feel that gold has room for further upside from current levels also. So 94,300 is this level which you can look at buying gold, keeping a stop loss of 93,300. And on the higher side, we are expecting levels of around 98,500 in the near term.
Okay.
So I'll
Yeah.
just add to this. 93,500 is a very crucial support for gold. Only in case that is reached in the near term, we are seeing at downside in gold. Otherwise, we are still expecting upside in gold to continue at least for the first half of May.
Okay, and if at all a downside were to be seen, how much more downside do you actually see if that support level is broken?
Yeah, so in the near term, in case 93,500 mark is breached on a closing basis, we are looking at levels of around 91,500 first and then 89,500 levels as well. So that would also mean $32.50 has to be breached. In that scenario, we are seeing gold slipping lower towards levels of around $3100 per ounce as well in coming days. And that is something which I'm looking at towards the end of May, not in the immediate short term.
Okay, got that. We'll come to that aspect, and I'll also include Navneet in a bit. But Sachin, to you as well. We the way the gold prices have rallied, just like I was mentioning, people have actually faced so much of FOMO. They've missed out on every opportunity, thinking that there could be some cool off, and every time it just kept on riding higher. Do you think those levels of say 70,000, 75,000 will come back again, or do you think there's an absolute no opportunity for that on gold prices, and one can actually just ride on the move, or just look at these levels that Sugandha has just talked about, 4,000-5,000 rupees of a loss, and probably look at that as an opportunity?
This actually, if you see the rally that you talked about, I mean, it's a very interesting rally. The rally from $2,000 to $2,500 per ounce took about 1,780 days to get to that point. The rally from $2,500 to $3,000 took exactly 219 days, and and the rally from 3,000 to $3,500, which actually did and it's got back, took
Yeah.
half of that time. So the speed in which the whole volatility
Yes.
around gold has been very, very massive. But again, it's to do with the fundamentals of what's happening in the world and what's happening around the reasons why gold gets impacted, and those have been not stable as well. We've talked about all the elements that Sugandha introduced the conversation on, and those aspects are not going anywhere. And hence, from my perspective, I think there could be a correction, a small correction to the very very limited levels, and perhaps I would look at even stretch to the numbers that Sugandha mentioned. But I think again, mid to long term, the pillars on which gold gets assessed, gold gets valued, gold gets demanded and then supplied, are very strongly in favor of gold.
Okay. Navneet, to you also, same question will be that, you did say that there could be some cool off of around 90s, and that will be a better time to look at buying on the down levels. But do you think there could be further correction, or is that it? And one will again see levels of 1 lakh and beyond then?
Well, levels of 1 lakh and maybe 1 lakh 2,000 is pretty much on cards. We do not rule out a possibility, but will it come to 91st or will it go to 1 lakh and beyond and then come down crashing is somebody's guess. We are of the opinion that prices at this point for retail investors, at least they should wait. They've missed most part of the rally. Now, there is no point chasing a rally where you already kind of missed about 30-35% move in the last 100 trading session. So I would rather advise that wait for a correction, wait for a cool off towards 90, 91, start to accumulate there, maybe at best towards 89,000, and then maybe you can play the rally towards 80, 96 and 101. But for now, if you no trade is a good trade, if you want to participate in the rally, you need to have a strict stop loss in place at 93, 500 or maybe towards 93,000, because below that prices might come down crashing at a very sharp pace. Every alternate day you are seeing about 1500 2000 points kind of a volatility. So be rest assured that next few days are also going to be similar. Today is Akshaya Tritiya, so do not get carried away just for the sake of buying gold on a derivative or maybe on an auspicious occasion. You will get better opportunities in the near future.
Okay, kept that in mind. But Navneet, also just wanted to ask all three of you all to give us a view on the outlook, the long-term outlook on gold as well. Everybody's been talking about how over the next few years there could be, similar kind of rallies. There are, brokerage houses that are talking about levels of 4,500 and beyond, on the, dollar per ounce as well. But do you let us know what exactly should investors really keep in mind? If somebody, say, wants to invest in for the next 5 years or 10 years, then what are the levels that one can keep in mind, and then maybe decide what is the investment that one has to do, Navneet?
Well, we've been talking about de-dollarization for the last 15, 20 years, but for the last 2 years, we are seeing the real transition happening in the dollar. And probably what was getting as a background is now started to deliver. So I don't rule out a possibility that gold prices could go maybe belly up from here also. 20, 25%, 30% also is a possibility. $4,000 also could be a possibility. But is it the right time to buy? Somewhere where I am not very comfortable in, because the kind of velocity or ferocity in pricing you've seen, you need to have a time-wise correction, if not price-wise correction. So maybe it could best consolidate for a few months, or maybe it could fall by about 3 to 5,000 points, where I would be comfortable. Ruling out 4,000 is not on the cards, maybe 1 lakh, 10,000, 15,000. But from a 10-year standpoint, 5-year standpoint, the kind of returns that you've seen in the past might not be true, might not get delivered, because 22% CAGR for an asset like gold is abnormal and mind blowing, and I don't think that kind of performance will be repeated in the next 5 years. If that has to happen, something has to go very drastically haywire in the global macro things or maybe geopolitically, which is not something that I am kind of envisaging at this point in time.
Okay. Sugandha, levels of 2 lakh on gold, do you see that now counting down on that, or no?
No, Sakshi, I'm not looking at 2 lakh kind of a level for gold. Gold has already delivered exceptional returns. See, gold is to mitigate the risk of your portfolio and provide you steady returns. However, it has delivered almost 12.98% CAGR returns over the last 10 years, which is exceptional. And it has kind of outperformed all other asset classes. But then this is not likely to continue. I also concur with Navneet. There would be a period of consolidation that we are going to see in gold, even though there are still a lot of tailwinds which are going to support gold from a long-term perspective, be the central bank purchases or the de-dollarization trend, and also the slowing growth concerns and the interest rate cut trajectory of the global central bank. So these are the major catalysts which are still going to drive gold from a longer term perspective. But then you have to buy gold at the right price. You do not have to buy at all the peaks. So I think it's better to wait for a cool off in prices. And in the third quarter of this year, I have a slightly different view. I am looking at a steep correction also in gold. See, I think this trade dialogue is likely to subside. There's going to be a trade deal between US and China and the other trading partners. After that, the global growth is going to revive, and that will lead to a lot of affinity. And in fact, investors are going to move towards risk assets. So that will be a time when funds will move out of gold, and we could see a deeper correction
Okay.
unfolding in gold. And I'm looking at levels of around 81 to 79,000 odd levels also. In case you buy at those levels, you can certainly enhance your return from a 1 year perspective. By next year, Akshaya Tritiya, possibly we are going to see levels of around 1,06,000. And if I talk about next 4 to 5 years, I am placing my bets on 1,15,000, not more than that.
Okay, so Gandha, if I have to ask you for FY26, would you bet on markets or would you bet on gold? What would your answer be?
I would bet on markets, equities.
Okay, so the past returns of gold could actually get shifted to markets is what Sugandha believes for the fiscal year 2026. So keep an eye out on that as well. Sachin, to you now, as a trend, I want to understand on the way up that we've seen for the prices for gold, have you also noticed in your reports that people have also redeemed a lot of their gold purchases? Have they booked out? Have they been selling a lot of gold as well? What is the kind of trend on the loans that you're seeing in India particularly?
So thanks. I think it's a very interesting conversation this time around on recycling. Recycling
Yeah.
tends to be a very important element of the consumption, and this is the first time that we've seen a 32% drop in recycling. And when I say recycling, it's what people come, put gold on the table, and in cash out. Right? What we don't consider recycling is gold against gold. Whereas typically in a jewelry environment, about 30% of the top lines happen against gold coming in and buying gold as gold. Now, the fact that it's dropped is purely around the confidence of the metal, where people have stayed within the commodity or within the metal and not moved out. So that's a great sign that we've seen. Now, will this go up? And the point that the current prices have been at an all-time high. I mean, there's a mention about the 21 peaks just in 2025. And when even in these high prices, historically we've always seen consumers coming in cashing gold and taking cash or perhaps moving that investment somewhere else. This is the first time we've seen a 36% drop. And that's purely on how the confidence of a consumer is or the end consumer on the street is around gold.
Okay. Navneet, coming to you for a conversation beyond gold, even on silver, something that we've been discussing for far too long. It was always expected that, silver is something that you were also very bullish on vis-a-vis gold, looking at the kind of opportunities in the new age industries that offers for silver, EVs, semiconductors. But off late in the recent run-up, it's gold that has catapulted much faster because both in gold and silver have edged up just about 1 lakh. At the same time, what is the outlook there, and would you advise, because of the comparative lesser trend of growth on silver, probably that's where the risk reward will be better?
We've been advocating silver for a very long time, and I think in all the past shows that we've had, we've
Yeah.
been promoting silver for. In 2024, silver gave about 34% kind of a return, and gold gave about 31% kind of a return. So both were pretty much parallelly moving up. But 2025, gold has outperformed silver beyond any imagination. It's about 27-28% outperformance in gold year to date basis. Now, what has happened is the gold to silver ratio, which is typically a barometer or an average where people kind of gauge which one is moving faster and slower, is trading about 102, 103 levels. Historically, it is only twice that it has gone beyond 100 and sustained. One during 1980s, secondly during COVID, and thirdly very recently. Now, my sense is that silver is in the fifth successive year of deficit, and I don't see a reason that demand side story is going to remain very robust and supply side constraints are going to be there. So this kind of deficit scenario is going to elongate for a brief period of time. Now, if there is a truce between US and China, then Chinese demand is likely to spur up like in a massive way, which is going to take silver prices even higher from here. So we continue to advocate buying silver on any decline towards 1992 levels, targeting 110 and 125 levels. Also, we see that this ratio of 100 to 103 could also gradually start to cool off and be sliding towards 92,000 level also. So parallelly, if you are a tactical investor and a tactical trader, then you can look to play this gold silver ratio also, where you could be looking to buy silver and sell gold
Okay.
for a 10% outperformance in silver from here on.
Okay, keeping that in mind then, Sugandha, closing comments from you. What is it that, you want our viewers to remember at large when they go ahead to, buy gold and silver today?
So, Sakshi, modern investors can align old age traditions with contemporary financial wisdom. So, it's time to exercise some prudence and adopt a balanced approach. I think you can honor tradition by buying gold in small quantities, but then you have to adopt a savvy, data driven investment. So, I think it calls for more investments towards silver because silver remains slightly undervalued as compared to gold, and we see new highs being formed in silver from a 1 year perspective by next Akshaya Tritiya. I see silver prices soaring higher towards possibly 1,15,000 first, and then 1,25,000 could be the level that we could see by next Akshaya Tritiya. So as of now, we can reduce your allocation towards gold and increase your allocation towards silver.
Okay, both Navneet and Sugandha on the same page at that. Sachin, how about you? How would you really advise investors to really look at gold and silver at the current stage when we have seen historic levels now?
Well, I'm not an expert on silver for sure, but I would differ from both my co-panelists on what should be done today. And I think from my point of view, when you're out there, you have something that's prospered so well. It has a very deep, significant meaning. And I would say that don't look at just financial investment for a day. Also look at what you can carry home and what you can, bring some joy, happiness, and smiles to your family. And that's the role of gold. That's the real role of gold today. What you do to your family, how you bring it up. So look at also from a slightly philosophical way. And maybe it's a small purchase. Maybe it's something small for your daughter or for your mother or for your loved one or your wife or your partner. But make that significant step. And I think that's what Akshaya Tritiya really means. And it's paid out in the past. So today's a day to not look at the Excel sheets. Maybe small, but make a step.
Okay, small, auspicious, just for the tradition, but in the long term, do keep in mind all the strategies that have been shared by all the experts who joined in on the platform. Sachin, thank you. Sugandha and Navneet, also thank you so much for sharing all your wonderful insights that we always enjoy for our viewers. And hopefully you have a fantastic, prosperous year ahead. We'll continue to catch up more with you, even on the consolidated path that we're looking at on golden prices. That's something that's not going away in trend, and that's something that all our viewers are always encouraged to watch as well. Thank you so much. Appreciate your time and happy Akshaya Tritiya once again. All right, viewers, we'll wrap it up at that on this episode of Akshaya Tritiya. Hope you have got enough and more insight on how the top experts of gold and precious metals are really looking at the current levels and the trends that they are expected to see going forward from here up until the next Akshaya Tritiya. Thank you so much for watching in, but do stay tuned on to Business Today Television. Stock market coverage will continue on the other side. You'll continue to hear from top managements on earnings, and of course, I'll be back for the closing edition at 3 o'clock.